keep in mind we'll start off lower, but not really a sharp gash. At least that's what the pre-open rates have suggested. Let's wait and watch if that's how it shapes up. But here's how the markets are starting off this Friday morning after India's won the semi-finals. 140 points lower, unfortunately. 150 now. It's worsening a little bit as we speak. So now kind of getting closer to that implied open level that we saw at the start of the show today, circa 200. We're about 20-30 points away from there. Banks are leading the charge down, 0.8% lower. I think ICICI Bank is putting that pressure. IT should come up on your screen because mid-caps are actually a lot well behaved. Nifty IT is doing okay. Mid-cap index, 0.28%. Small-cap index should come up on your screen. Flat, absolutely flat. Wow, it is actually banks which are leading the pain lower. Let's get the heat map up on the screen because the market breadth also may look adverse. The small cap index is okay. Indigo 2.5, ICICI Bank, the culprit today, along with HDFC Bank, which is down 1%, putting pressure on the Nifty. L&T continues to sulk, by the way, 1.5% lower for that one. We have the commodity plays in Tata Steel and Ultratech also correcting. Maruti Suzuki is correcting as well. But yes, the principal pain points come from the two banks, which is HDFC Bank, 1.24% lower, and ICICI Bank, 1.7% lower. Indigo, of course, continues to have pain. I wonder why so much of pain. Okay, Infosys on the other side, and Wipro and HCL Tech helping. So 1% apiece each for all of these. BEL is not doing too badly for itself. Eternal, a bit of a spike. ONGC and Reliance naturally saw some spikes because crude prices have moved higher. So balancing acts out here, IT versus banks. But yes, banks currently have the upper hand in terms of exerting the pressure on the downside with ICICI and HDFC topping.
You know, I would think RIL would show a better upswing now that that Russian crude clarification has come. But clearly quite a bit of pressure. You know, you might just see a reversal of moves considering that the breadth is not that bad. You're still 120 points down compared to what the implied was showing at some point. But we'll have to wait and see. As of this point, it's looking quite tough. Nifty contributors, just very quickly, let's get the Nifty contributors up before we get to the broader markets and what's happening over there. RIL actually giving some support to the index as Infosys and TCS is all about the tech pack. ICICI and HDFC really dragging down the markets as an L&T. All of that upswing getting reversed today in trade, at least in opening trade. The small cap and the mid cap, let's pull those up and see what's happening with the broader markets. Not too bad in relative terms. The Nifty mid cap 150, about 0.25% down. Small cap 250 flat. Advanced decline ratio is not half bad, 1200 to 910. So we'll have to wait and see if this is more of a private bank issue right now, which is dragging down the market, or is it something bigger? Want to pull up the sectoral heat map for you. This will also give us a good indication about whether the pain is widespread. Nifty IT, the only sort of very clear uptick this morning, 1% up, and Nifty has been this contrarian bet over the last few days. Whenever all the markets are in an entirety celebrating, IT sulks and vice versa. So that's what's been happening. India defense continues to be strong, and I would suspect in the last 4 or 5 trading sessions, it's the defense pack which has stood out. Pharma is doing okay. Nifty realty, time and again you have realty stocks really taking the hit. Metal stocks once again giving up gains from yesterday, and private banks, like we said, are showing pain. Some individual stocks we can look at. I want to pick up MRPL to start with. This clarification that came in on force majeure and other reports swirling through the day for MRPL has seen at least a 0.5% uptick for it. The crude spike is really the big story, right, overnight, because Iran claims it has bombed a US oil tanker, and then you saw Brent and WTI spike. ONGC showing about 0.25% gain. Oil India is doing slightly better. Going to pull up the airlines if we can, and two of them in the listed space, both of them doing quite badly, 2.5% down on Indigo. Fractal, we talked about results, and let's see what's happening there, about 3.5% up. Garden Reach has an order win, and you know, I'm also going to see if we can pull up the internals of the defense pack, because I suspect a Cochin Shipyard, a Mazgaon, these are the companies that are going to be doing relatively better. So defense and IT really is where it is. Look, DCX Systems on the watch list this morning. Alex spoke about it as well. So DCX Systems doing fine. Mazgaon, Garden Reach, Cochin Shipyard, and all of those doing fine. But it's a very small clutch of stocks that I would say is showing green overall, Alex.